and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the day's trade, starting from the benchmark index moves to sectoral action and all the stocks that are moving in trade. We'll also get you expert views to find out where exactly should you be deploying your funds in the equity markets to make maximum profits. But first up, a quick check on how the Nifty and the Sensex are doing at this point in time. Well, halfway through the mark of the trading session, and you can actually see the Nifty holding up above the 20,058 level right now. 65 points of an upside is what you can see, about 0.3% of an uptick. And on the Sensex as well, there's a 200-point jump for this one, 67,419 the current level, just about 0.3% higher in trade. The mid caps are sulking, about 0.3% of a decline for this one after a sharp fall in yesterday's trading session of about 3.5–4% odd. The small caps have inched up higher, about 0.2% up in trade at 12,476. Let's also look at the various other sectoral indices that are doing well in the markets. It's the PSU banks that are leading from the front when you talk about the sectors. Apart from this, you have the oil and gas space, the metals pack, private banks, financial services sector, the FMCG and the consumer durables that are up in trade. So you can see the Nifty PSU bank clearly up by 1%. So it's the financials that are definitely supporting the markets. Oil and gas space also buzzing in trade as well. Among the top gainers on the Nifty 50, a whole host of names coming in from the banking names like Axis Bank, finance names like Bajaj Finance, they are up in trade. You also have Coal India, Grasim, BPCL up in trade. So the energy names are definitely buzzing in trade. You also have Bharti Airtel that's touched a 52-week high, 907 currently. Titan, Power Grid, these are the other moving stocks as far as the Nifty gainers are concerned. On the downside, however, you can see pressure building up on some of the stocks from the pharma basket like Cipla or Divi's Laboratories, that's down in trade. L&T, HDFC Life, Adani Ports, these are the stocks that are dragging on the Nifty index. But let's welcome our guest on the show. Hemang Jani joins in, well-known market expert. Welcome, Mr. Jani, and thank you so much for taking the time out. So 20,000 on the ticker on the Nifty. What is your market outlook currently? Do you see some resistance now building up for the Nifty here, or do you think we are here for another leg of the rally upwards?
Hi Sakshi, thanks for having me. While we're rejoicing the 20,000 mark on the Nifty and the fact that the mid cap and the small cap stocks have done so very well in the last 6 months. Yesterday there was a good amount of swing and volatility in the market, and that would have brought certain amount of caution in the minds of investors as to how they should approach. So my take is that overall at the market level, I don't see much of an issue, particularly at the index level and the large cap level. But yes, because of the kind of run up that we've had in the broader market, you might see a bit of a volatility in certain pockets. But I don't think there is a case for too much of worry on that front, because if the index has already moved up, let's say about 30–35%, then about 10–15% correction is very normal. So I'm not looking at this development as some sort of a worrying sign.
Okay, like you pointed out about the mid and the small caps, and everybody has been discussing now what's next after a 40%, 50% surge for the mid and the small caps from their March lows until now, because the rally has been quite swift and nobody had anticipated such a sharp run up now. But do you think at this point in time, is the party nearing its end at this point for the mid caps and the small caps? And should the Cinderellas of the world now get worried about the kind of clock ticking 12? On the mid and small caps?
So Sakshi, typically when you have any market move, you will have certain corrections along the way, and this is true for any market, whether it's large cap, small cap, etc., etc. So I don't think that itself is a worrying sign. Only thing is that certain pockets where we've seen a 5x or maybe more up move, we need to really check and validate our hypothesis about what sort of growth market is building in, and is there a big gap or a disconnect between what market is expecting and what companies can possibly deliver. So at this stage, I don't see too much of an issue. You may have certain pockets of overvaluation or stretch valuation, as we call it, but at a broader level, I don't think one needs to really worry much.
Okay, but what would you suggest investors to do at this point in time? Is it time to perhaps look at booking profits out and perhaps deploying money afresh in the large caps which have not had a run up yet and perhaps may have a better chance of participating better in the next leg of the rally in the markets?
Yes, in terms of putting fresh money, I think it would be more sensible and prudent to go with large caps versus mid caps. That's number one. Number two, when it comes to mid cap, there are too many stocks. Typically you will have top 200, top 500. So you need to do a little bit of filter check or some sort of groundwork in terms of what stocks do we really want to go in for, because the index will not give you a true picture. You need to dive deeper into the stocks and valuations, etc. So I think at any point you will have some good interesting mid cap and small cap stocks to look at.
Okay, so which pockets, according to you, are still a safer bet in the mid cap, small caps if people want to still invest money there? And where should you absolutely stay away from in the mid and small caps now?
I feel that the PSU and that railway defense and similar kind of stocks is where there is clearly a case of some sort of a stretch valuation. So I would not be comfortable putting fresh money over there. And if I have to put some new money, I would, at a correction, of course, I would look for either some of the mid cap companies in the cement space. I would look at some of the IT mid cap names. Also, maybe we can look at some of the paper and sugar companies where again the correction has been sharp, but the valuations are not stretched.
Okay. I also asked you this question because we just saw this brokerage house, Kotak Institutional Equities, dropping the recommendations in the mid-cap portfolios since they said that they do not find enough and more stocks beyond the BFSI space that could perhaps give a potential upside of, on a 12-month fair value basis. Would you say the way financials are coming back in flavor, would you say perhaps BFSI, IT stocks, these are the safer bets now?
So clearly, BFSI definitely, in terms of valuations, is very comforting because while the growth is intact, the valuations are also, looking quite reasonable. Also, IT, the valuations are not on our side, but stock-specific stories are looking pretty interesting over there. So I think one should be far more selective in terms of what you're getting into, but both these pockets are looking quite interesting.
Okay, just last question to you then, sir. Help me understand what is, your favorite spot to be in the markets right now. If you had fresh money to deploy in, where exactly are you putting that to work now?
So I would be comfortable with large caps, as I said before. And if I have to give you specific names, I would be comfortable with an Ultratech. I would be comfortable with an HDFC Bank. I would be very comfortable with Titan. I think these are the stocks that one can definitely buy even at current prices if you have a 1 year or 2 year kind of a time horizon for investment.
All right. Well, many thanks, Mr. Jani, for being with us on the show and discussing all these insights about the mid and the small cap space and where should one look at opportunities in the large caps, which are now looking perhaps more promising in the current leg of the markets too. Many thanks. Always a pleasure having you with us. Let's look at the
Thank you
markets
so much.
again. About 190 points higher in trade on the Sensex, 67,411, and the Nifty hovering about 20,055, 60 points higher in trade. Looking good on the surface. The broader market slightly sluggish in trade after yesterday's sharp sell-off, but we'll continue to find out what's next for the markets going forward.
You're one of the very few people who have